Okay, let's get right into it. I want to share a cold, hard truth with you today. And look, if you can really, truly grasp this, I promise it will change your financial life forever. Here it is. 90% of young people aren't poor because they lack money. They're poor because of their habits. Yeah, you heard that right. 90%. And you know what the saddest part is? Most of them have absolutely no idea they're stuck repeating these destructive patterns every single day. These are patterns that are just quietly, silently killing their financial future. It's like they're trapped in a loop they can't even see. I remember this one young man, about 26 years old, just full of confidence. He told me, "Hey, don't worry about me. I know how to manage money. I'm smart enough." Well, 3 years later, he came back. But this time, that pride was gone. Instead, he just had this painful question. Why am I still poor, even though I work as hard as anyone? And I had to look him in the eye and tell him the same thing I'm telling you. Intelligence doesn't make you rich. Habits do. So, how do we fix this? Well, here's our game plan for today. First, we're going to uncover what I call the invisible trap. Then, we'll get into the weeds and identify the 7 financial destroyers. After that, I'm going to show you the path to break the loop. And finally, we'll talk about why the future starts today. All right, let's dive right into Section 1, the invisible trap. This is where we're going to explore exactly why so many smart, motivated, hardworking people just stay poor. And now for Section 2, the 7 financial destroyers. As we go through these, I want you to be really honest with yourself, because just knowing this stuff, just having that awareness, that is the absolute first step to making a real change. Let's kick things off with the most common one of all, spending based on your feelings, not on logic. I mean, how many times have you bought something only to look at it a week later and wonder, why did I even want this? Maybe it was that new phone when your old one worked perfectly fine, or that treat yourself moment that drained your bank account. You're not alone. This is a classic pattern. We use spending as a crutch, right? Trying to fill some kind of emotional void with stuff. When we're happy, we spend to celebrate. When we're sad, we spend to feel better. And at the end of the month, that money hasn't just disappeared. No, it's actively run away from a lack of control. Now, if you want a perfect, maybe an extreme example of this, just look at the story of Mike Tyson, one of the greatest boxers in history. At his peak, the man earned over $300 million. And yet, he went bankrupt. How? It came down to one simple habit. He spent money whenever he felt an emotion. Happy, sad, lonely, you name it. He famously said, "I don't spend money, I throw it away." Now, you might not have millions to throw away, but are you burning through your own cash in the fire of your emotions? That's a question we all have to ask ourselves. All right, let's move on to the next habit, which is a really sneaky one. It's called lifestyle inflation. And man, this trap is so hard to escape. Let me tell you about an office worker I know. We'll call him Nam. When Nam made $10 million a month, he spent, you guessed it, $10 million. Then he got a big raise to $20 million a month. And what happened? He started spending $20 million. He upgraded everything, his phone, his motorcycle, his clothes, even his daily coffee went from a simple brew to some fancy latte, all to match his new salary. His income literally doubled, but his net worth, it stayed at exactly zero. And this slide right here, this illustrates the fundamental difference. It's the whole game. Look at the left. When most people get more income, they just run faster on the spending treadmill. But on the right, the rich get more income and they use it to plant a money tree, an asset that's going to grow all on its own. This isn't just some nice philosophy. This is the core mechanism that separates a life of financial struggle from a life of financial freedom. Now for one of the biggest ironies in all of personal finance. It's wild. The people with the least amount of money are often the most terrified of taking risks. And that fear is precisely what's keeping them poor. I remember a 24-year-old woman telling me, "Oh, I'd never invest. What if I lose my money?" But literally minutes later, she was proudly showing off her brand new 30 million dong phone and 20 million dong handbag. Do you see the contradiction there? People are afraid of the risk of investing, but they have zero hesitation spending a ton of money on things that are guaranteed to lose 100% of their value. So here's the crucial point. These two different fears create two completely different destinies. The rich, they're afraid of standing still, of letting inflation just eat their money for lunch. The poor, they're afraid of moving forward, of taking a smart, calculated risk. But let's be real. In today's world, not investing is the biggest risk of all. I mean, keeping your money in a savings account that earns 1% while inflation is at 3%, That means you are guaranteed to lose 2% of your money's value every single year without doing a thing. The tragedy is, people who fear investing don't lose money because they invested, they lose money because they didn't. Okay, let's quickly cover the next 4 destroyers. These are a little more subtle, but they're just as damaging. Number 4 is procrastination, the single most expensive habit there is. Think about 2 friends, Anne and Ben. Anne started investing just 1 year before Ben. That one single year, thanks to the magic of compounding, meant Anne ended up with nearly 40% more money at retirement. 1 year of delay can cost you decades. Number 5 is the get-rich-quick trap. The siren song of crypto scams and so-called hot tips. I knew someone who lost $120 million on a sure thing from a total stranger in a Facebook group. Real wealth is a marathon, not a sprint. Number 6, following others blindly. Your friend buys a new car, so suddenly you feel like you need one too. It's just herd mentality, and it leads straight off a financial cliff. And finally, number 7, living only for today. This is that mindset that the future will somehow just magically work itself out. I've got news for you. It won't. Your future self is completely at the mercy of the decisions your present self makes. All right, we have identified the traps. We know the enemy. Now, let's talk about the escape plan. This is section 3, the path to break the loop. These are the real actionable steps to build actual freedom. You know, so many people think building wealth starts with some big dream or a burst of motivation. They're wrong. It starts with the truth. The brutal, uncomfortable truth that you're wasting money, that you have no plan, that you're lying to yourself every time you say, I'll change, but not today. Remember Nam, the guy with the lifestyle inflation? His change began the day he actually looked at his bank account after 5 years of work and realized he didn't even have 20 million in savings. That slap of reality was more powerful than 1,000 motivational videos. So if you want to change, you have to first look your situation square in the face. No excuses, no blaming anyone. Only when you accept where you are can you actually start to go somewhere else. Financial discipline doesn't mean you have to live some miserable life where you can't have fun. It's not about that at all. It just means you treat your money with logic, not emotion. Let's start with 3 simple, non-negotiable rules. First, pay yourself first. Seriously, this is non-negotiable. The second you get paid, automatically transfer at least 20% to a separate account. This works because it takes willpower completely out of the equation. You save before you even have a chance to spend it. Don't wait to see what's left at the end of the month, because I can tell you right now, nothing will be left. Second, never ever go into debt to buy liabilities. And third, do not let your emotions control your wallet. Period. You don't get rich listening to hot tips from your cousin. You get rich by understanding how money actually works. Warren Buffett reads for 6 hours a day. Bill Gates reads enough books to fill a library. The wealthiest people on this planet are relentless learners. Meanwhile, a lot of young people watch a 20-second TikTok about stocks and think there's some kind of expert. Look, if you want to break the cycle of poverty, you have to commit to real learning. Read books, study successful people, learn from the mistakes of others. You only need to understand finance better than half the people around you to become wealthier than them. And one of the most fundamental things to learn is the difference between an asset and a liability. It's incredibly simple, so listen up. Assets put money in your pocket. Liabilities take money out of your pocket. That's it. An asset is a rental property generating income, or a stock that pays you dividends. A liability is that new phone, a fancy car, or designer clothes. It's simple. The poor use their money to buy things that make them look rich. The rich use their money to buy things that actually make them rich. So, what's the crucial point here? It's this. All your financial energy, all your focus should be on one thing: using your money to acquire assets. You don't need a dozen of them to start. You just need your first one. One small investment, one new stream of income, one rental property. That very first asset is what will help you buy the second, and the second will help you buy the third. And that, my friends, is how ordinary people become extraordinarily wealthy. Okay, step 5 is to create multiple streams of income. This is the bottleneck for so many people. They say they're poor, but they only have one job, one single source of money. So I'm going to ask you directly, right now, what is your second source of income? It doesn't have to be another full-time job. It could be freelancing a skill you already have, selling products online, or even just income from an investment. If you can't answer that question, your entire financial foundation is resting on one single, very vulnerable pillar. You know, young people often lose the financial game not because they aren't smart, but because they're impatient. They want results right now. But wealth just doesn't work that way. It needs time. Think about the Chinese bamboo tree. For the first 5 years after you plant it, you see absolutely nothing. All the growth is happening underground, building this massive, complex root system. Then, in just 5 weeks, it shoots up 25 meters into the air. Your financial life is exactly the same. Real success is built where nobody can see it. If you start investing $2 million a month, you won't be rich next month. But in 5 years, in 10 years, you will be living in a completely different world. And finally, you have to redefine what rich even means. The wealthy person of the 21st century isn't defined by mansions and supercars. No, they're defined by the things on this slide. Freedom of choice, earning money while you sleep, and maybe most importantly, having the ability to say no. That is the new rich. It isn't defined by liabilities, it's defined by freedom. The freedom to choose exactly how you spend your time, because your assets are working for you. And that brings us to our final section. The future starts today. And I want you to remember this. There is absolutely no shame in being poor. The only tragedy is staying poor because of habits you refuse to change. Your future is a choice, not a circumstance. I want this to sink in. No one is poor for lack of money. People are poor for lack of the right habits. Don't let these 7 habits become your life sentence. Please, don't repeat the mistakes of the 90%. You can start changing today, right now. By changing just one small habit, you can change the entire direction of your life. And I promise you, one day you will look back and say, thank goodness I started back then. The choice is yours. The future is unwritten. So really, the only question left is the one right there on the screen. Will you begin?